Hello and welcome to the EDPF Academy, where we talk all things property. In today's 10-minute property tip, we're diving into the crucial topic of property insurance for investors. If you own property, whether residential, commercial, or industrial, protecting your investment is essential. We all know that investing in property can be a lucrative venture, but it also comes with its fair share of risks. One major way to safeguard yourself from potential financial loss is by ensuring that you have the right property insurance in place. Many investors overlook the importance of adequate insurance until disaster strikes, and by then, it's too late. In this presentation, we'll explore the different types of insurance required for various property investments, the risks involved, and the best methods of coverage to ensure financial security. We'll break down essential policies that all property investors should have and then take a dive into specific types of insurance for different investment properties. By the end of this presentation, you'll have a basic understanding of what coverage you need to protect your assets effectively. So, let's get started. Property insurance is designed to safeguard your investment from potential financial loss. There are several risks associated with owning and managing property: fire, theft, vandalism, natural disasters, and even liability claims from tenants or visitors. Without the right coverage, you could find yourself facing enormous financial burdens that could jeopardize your entire investment portfolio. By understanding the different types of property insurance, you can ensure your investment remains protected under any circumstance. Whether you own a single residential rental property or manage a large portfolio of commercial and industrial spaces, having the correct insurance policy can mean the difference between surviving an unexpected event or suffering a massive financial setback and potentially losing your entire portfolio. Regardless of the type of property you own, there are fundamental insurance policies every investor should consider. Building insurance. This is the most critical insurance type for property owners. It covers the cost of rebuilding or repairing the property if it suffers structural damage from fires, storms, floods, or vandalism. Without it, an investor would have to cover these expenses out of pocket, which could be financially devastating. Contents insurance. If you provide furnished rentals or own office and retail spaces with installed fixtures, contents insurance protects your investment in furniture, appliances, and fittings. This coverage ensures that even if these items are damaged or stolen, you won't have to replace them at your own expense. Public liability insurance. This protects you from legal claims if someone is injured on your property. This could be a tenant slipping on a wet floor, a visitor getting hurt due to faulty stairs, or a contractor getting injured while working on your premises. The costs of medical bills and legal fees in these cases can be substantial, so having liability insurance is crucial. Loss of rental income insurance. If your property becomes uninhabitable due to an insured event like a fire or flood, this policy ensures that you still receive rental income. Many investors rely on rental payments to cover mortgage expenses, so this insurance helps prevent cash flow disruptions. Special risk cover. This includes protection against unique risks such as riots, floods, and terrorism, which standard insurance policies may not cover. In regions where political unrest or extreme weather events are a concern, special risk cover can be a lifesaver. The key risks that property insurance covers include fire and explosion. Fires can be caused by faulty electrical wiring, gas leaks, or tenant negligence. The cost of rebuilding after a fire can be enormous, and without insurance, an investor could face financial ruin. Theft and vandalism. Properties, particularly those in high-crime areas, are susceptible to theft and vandalism. Whether it's stolen fixtures or graffiti on the walls, these incidents can result in significant expenses. Natural disasters. In certain areas, properties are at risk of floods, earthquakes, and severe storms. Insurance ensures that you can repair damages without financial strain. Tenant-related risks. Tenants may cause accidental or even intentional damage to your property. They may also fail to pay rent, leading to income loss. Special insurance policies can help mitigate these risks. Public liability risks. If a visitor or tenant suffers an injury due to negligence, such as a broken stair railing or a loose tile, the property owner can be held liable. Legal fees and medical costs in such cases can be overwhelming. There are different ways insurers structure property coverage. Replacement value ensures that a damaged property is rebuilt at today's cost. This is crucial, as construction costs increase over time, and without this type of coverage, an investor may not receive enough payout to fully restore the property. Indemnity cover takes depreciation into account, meaning the payout is lower than the full replacement cost but may be more affordable in terms of premiums. All-risk insurance. This provides extensive protection beyond basic coverage, offering peace of mind for property owners with high-value investments. Named perils versus comprehensive cover. A named perils policy only covers specific risks listed in the contract, while a comprehensive policy offers broader protection. While comprehensive coverage may be more expensive, it provides better security against unforeseen risks. Now, let's look at how insurance needs vary across different types of properties. Risks in residential rental properties include tenant-related damages, non-payment of rent, fire, and vandalism. Essential coverage includes building insurance, public liability, and loss of rental income insurance. In student accommodation, high tenant turnover increases wear and tear. Insurers assess these properties differently, requiring additional cover for malicious damage and legal expenses. In security complexes and gated communities, shared amenities and access points require additional liability cover for common areas and trustee indemnity insurance. For apartment blocks, insurers assess multiple dwellings under sectional title schemes requiring specialized body corporate insurance. With retail properties, risks include fire, theft, business interruption, and third-party liability. Business interruption insurance is crucial for commercial tenants. For office buildings, key risks include liability for slip and fall incidents, tenant defaults, and damage to office equipment. Comprehensive building and business interruption insurance is essential. With industrial properties, an investor will have to deal with very high risk due to machinery and hazardous materials. Specialized industrial risk insurance is needed. In short-term letting like Airbnb, holiday rentals, and bed and breakfasts, higher risks are mostly due to frequent guest turnover. Insurers offer bespoke policies covering accidental damage and public liability. Finally, in mixed-use developments, combining residential, retail, and office space requires a blended policy covering all asset classes and risks. Choosing the right policy requires careful consideration of the following factors. Conduct a risk assessment based on property type, location, and tenant profile. Compare policies from different providers to find the best balance between coverage and cost. Work with a specialized property insurance broker who can tailor a policy to your specific needs. Ensure that coverage limits are aligned with replacement value, potential income loss, and liability exposure. Some common mistakes investors make include underinsuring their properties and contents, leading to inadequate payouts in case of disaster. Overlooking liability and special risk coverage, which can result in huge legal or repair costs. Failing to update insurance as their property portfolio grows, leaving new assets unprotected. To avoid these mistakes, regularly review your policies, seek expert advice, and ensure compliance with legal requirements. By now, you should have a basic understanding of how to protect your property investment with the right insurance coverage. Whether you're new to property investing or managing a large portfolio, the right insurance ensures your financial security.
Thank you for watching. If you found this information useful, don't forget to like, share, and subscribe to our channel for more insights on property investment. Thank you for being part of the EDPF Academy #1 million title deeds project. We hope you will continue your journey to property ownership with us by registering for our Academy course at www.edpfacademy.app or visit our main site at www.edpf.co.za for more information about the Enterprise Development Property Fund.